Hi guys, welcome back to our channel. Hope you're enjoying the content so far. In this video, we're going to discuss the most powerful tool on TradingView that you can use and be a successful trader with. Okay, so let's jump in. So let's go to a small time frame because it's a lot easier to use a small time frame than it is on a larger time frame to see. So we're going to use the Fibonacci tool, which is if you click this button here on TradingView, the little arrow on the right hand side of the toolbar down the left hand side, go down to fib retracement. Okay, and a fib retracement is just basically that. There's a lot of numbers, all percentages. Okay, so how we use a fib? You want to use it from the swing high to swing low if you want to sell, and the swing low to swing high if you want to buy. So we use an example. I'll tell you the exact number that you should look to trade from, and we'll go from there. So we'll click the fib, find a swing high, swing low. So I found one just here. So we're looking like it's going to buy. If we use one of our previous videos about market structure, you would understand we want the low and the high, and then we can go from there. So this is a swing low because it is low. Okay, there's its high, there's its low, there's its high, there's its low, lower high, and then higher low, and then we're off again. So effectively, we want to pick this swing low here. We want to draw our fib to the swing high, which should be this point. And we do it from wick to wick, okay, wick to wick, because that's where price went to. So that will be its high. So what we want to do, and let me just zoom in so we can see everything clearer. So we can see that's its swing low, and we went right to the wick. Let's get that right to the wick up here. So we know that that's its high. So the magic number that I feel and I use all the time, because I use the fib in my trading strategy as well. Mine may be on a much lower time frame, but I'm going to show you an example just so you know that you can trade just like this. And I'll give you your entry point and your exit point. Be down to you to put your stops, but idea is below the swing low. So the magic number that I use to trade from is a 70.5%. This number right here. The 70.5. It retraces, because let me just start. When we trade, we want to buy when it's low. We want to sell when it's high. We don't want to sell when it's low, because that doesn't make sense. And we don't want to buy when it's high. So if we mark 50%, okay, so this, we will use a horizontal ray, which again, just click the arrow on the the right hand side of the toolbar and click horizontal ray. So if we click and put a line at 50%, we know that we will buy when it's below 50. We won't buy if it's above 50 because that doesn't make sense. You don't buy when it's high. And that's where we'll do. So anything below 50 is a good shout to then buy from. As we're showing in this example, we're buying Euro USD, for instance, in May. This is a random time that I've picked. And we can see that it's dropped below. It's come in. It's dropped below 70%, but retraced. And we're at 70%, and we slowly trickle away. So that's not too bad. Okay, so that's a great trade at 70%. You want to exit. If you want to do short-term trades, you don't want to be in. I'm not going to say this is a scalper. I'm not a scalper. I would class myself as a day trader. I trade for the day. Long-term, I used to trade long-term, but with the current markets, it's better to trade short-term, in and out in a day, giving yourself a daily wage. So short-term, I would target the highs. So when price goes up and stops, we get our swing high and it drops down. That's when we can be able to draw our fib, because it's a fib retracement. So we're waiting for a retracement to happen. Then we can go and buy. A retracement is just a small pullback in price to come back into an area of interest to then buy from. So short term, exit at 0%. So draw a line at 0%, which is exactly its highs. So it's very likely you have more of a chance, because we know we're in an uptrend, we've done a market structure, and now we're into Fibonacci rules. 0% is always a good shout. So we would have that point here, and then we'll have our stops below this point. So we'll draw there. Okay, so we're talking 20 pips down, 20 pips up. We're looking at a risk to reward of 1 to 1. Not great, obviously. The smaller the time frame, the better stops you can get, stuff like that, and you can target obviously higher prices. I have the -27 as a take profit target and a -61 also as a take profit target. You can use those instead of 0, or you can add a few extra trades, take profit as you're going up. Remember, as a collective, you only want to risk 1%. As in a previous video I've said, risk management is the most important thing. The most important thing you can do with trading. 1%, if you place 3 trades, just divide it by 3, and then your positions, you can add 3 positions and write it up at -1 at 0, -27, -61. So that is a very good example. Remember, the entry point is going to be 70.5. You know, if you feel a bit more confident, you can try and target the 79, which you can see would be a wick entry on the hour. You'd have to be pretty quick at entering it before it retraces back up and you lose a bit on slippage and stuff like that. As you can see, we just carry on going. 0, we could potentially get another price when if we fib from swing low to swing high, we may get 50%. It may be a little bit higher than 50%, so we wouldn't really look to enter that trade. So that is a buying trade. Let's see if we can find a selling trade, which there will be one if we look closer. So here we go again. Swing high, swing low. So we want to sell. So we start 100 will start at the top, 0 will be at the bottom when we want to sell. And then we want to target the 75, the 70.5, which is here, which is right here. Again, our stops will be above the high, this wick here. So after this is formed down here, we've drawn the fib, we're waiting for the 70.5. You know, we could predict it because it takes 3 hours to even go into it and touch it. So we have 3 hours after this candle has closed, another 2 hours after this candle is closed, to then work out where's our entry, where our stops are, because we need to know our exits before we even know our entries. Okay, and then again, we will target 0, -27, -61. That's it. It's very simple. Using the right risk management, 1%, like I've said before. Using the fib retracement with these numbers. Again, these aren't the basic numbers. So if you double click and go to the settings on fib retracement, you get the coordinates, visibility, then style. Okay, so these numbers, you won't have them. So please take a screenshot of this, of these numbers. I've got 30%, and we'll cover that why I've got 30% on there. Minus, I've got the 0.618, which is the 61.8. I've got 0.79, 0.705, because these are done decimal places and they convert it into percentages after. I've got my 3 take profit targets, which are 0, -27, -61. So take screenshot, save these, and then when you go onto TradingView next, please go and input these. Like I said, if you click the fib, go to the cog, drop down style, here we go. You have to delete, there's other numbers that will be there, so you have to delete them and then re-input these numbers. As these are, scroll down, you can change the background. I have mine fully transparent and levels is in percents, and then click OK. So as we're looking through it, swing high, swing low. Effectively, if we really wanted to, we could go both ways. Because obviously we know that we're still in an uptrend. Okay, so we've got the highs, lows, highs, lows, highs, lows. A reason I chose this one is because obviously I can see it a lot clearer, but more the point that when it failed to touch here, gone back up, you know, we had a few touches of the 70.5, could have went in, market structure did change, and then we got a zero. But if we were going to do swing high to swing low again, which would have been, this would have been its low. So just delete this one, because obviously we're still thinking. So I'm going to give you, like I said, we're going to brutally honest truth about everything. Again, we come down to 70.5, we touch in, stops be below 100. But I would hope after you realize that after it's gone straight up, no issues whatsoever, that when it failed to make a high, something would have clicked into your brain and said, something isn't right here, where it comes back down, comes in, dips away. Maybe I would hope you'd be at break even, and that's moving your stop loss to your entry point to just save your account. It's great risk management to move your stop loss to break even. And then when it fails to really reach it and comes back down, you would have seen this and been like, okay, I don't think it's going to make closeout. And that would have been that. Sometimes you're not, and sometimes you're going to lose. That's the way of trading. You know, I don't win every trade. There's not a trader I know, an actual trader that I know, that doesn't take losses. Again, so we will do swing high, swing low. So swing, we can see this point does not reach our 70.5 or even above 50. Okay, so when that happens, this is a no trade. You're not going to sell low. You're not going to sell from 30%. You're not going to sell from 50%. You want to sell from up above 50%. So what we will do is next point, swing high to swing low. Okay, we're back at the 70.5 right here. How many times are here? Even that's a wick entry if you wanted to. Again, what we're looking for, stops above. We're looking for the 70.5, 0, minus 27, minus 61. And we can see it hits it over and over again. Sometimes you're going to lose. And that's the way it is, you know. You can be successful and have a 33% success rate of trades. These are high probability trades. When they do come into the 70.5, again, if you wanted to, little bit of a, there's many hours that you could have gone in at a second entry at the 79, had a tighter stop loss, the same place above. I'd go 1 or 2 pips above the high and target 0, minus 27, minus 61. But always use 1% risk. So if you're going to have 2 trades, so it's 0.5% risk on each of the trades. If you can have 3, it's 0.33% roughly per trade. So you're going to divide it over the amount of trades you're going to play. So whatever happens, you will only ever lose 1% of your account balance. That's the joys of risk management. That's how to use the Fibonacci. Remember, swing high to swing